Are you not entertained?
Are you not entertained? Are you not entertained?
Bitcoin hit $35,000. High time frame, inverse head and shoulders. I shared it. Low time frame, inverse head and shoulders. I shared it. Larsson Line flips gold. Here, I shared it. And I post the video with this thumbnail and title Breakout, when price in the video was still 30,577, which was here. And the feedback when I post a happy tweet. Now all these TA will tell you that I told you before, while in reality they were all in their pants. Yes, why don't you call it 6 months before all marketing? Lol. The TA gurus always come back in bull markets to fool the gullible and sell their analysis. So let's jump into a time machine and go back to the 16th of January. And let's listen to what I said in the beginning of the year, specifically to this video. Bitcoin and alts, did I buy yet? Clear answer and why. Not to prove anything, I'm just joking with these comments, but because there are tremendous learnings in that video. And I think you might see it in a different light now, what I said back then. Then after that we will look at Bitcoin price now and price scenarios forward from here. Even if you watched it almost a year ago, I really encourage you to watch it again with me now. Bitcoin is back, baby! So, have I bought already? Or have we just hit resistance and the party is already over? You can see here how we perfectly, almost to the dollar, touched this resistance level set from the November close, both 2 days ago and then again today. So is this it? Is the party over? Or have I bought back? As you recall, Larsson Line flipped blue over a year ago at 49,000. So buying back here gives you 2.5 times as many coins and a lot better night sleep for an entire year, because this could easily have gotten a lot worse. In this video I will answer what I have done and why. I don't hold back here on the channel. I've shared my key conclusions for years, so I really hope that you're happy, because we've absolutely smashed it, guys. And surely this has led to a steady inflow of new subscribers to the YouTube channel, right? Let's look. So analytics, subscribers, what? Minus 117 subscribers in the last month. So no, it doesn't. People unsubscribe. Why is that? Clearly it's not due to the quality of the content, because we've been spot on. It's not always going to be like that, guys, but this period we have been. So why? It's because they quit investing. They don't just unsubscribe from my channel. They unsubscribe from the entire field of investing. They quit. They get interested in gardening instead, or some computer game. 90% of people lose money trading or investing. And when do those people actually pack up their suitcase, sell and quit? I've said this many times on the channel, so you guys already know the answer. At the bottom. Exactly, when the whales are buying. And if I draw your attention to the volume profile here on the right, you can see that somebody's been buying here, and clearly that wasn't retail. Everyone knows buy low, sell high. Despite that, 90% of people do the other way around. They buy here at the euphoria top and then they sell at what could be the bottom. Retail will come back and FOMO buy their biggest purchase exactly on the euphoria top, when the whales are offloading. And the circle of the food chain repeats. I'm telling you this about the subscribers only because this is one way to smell a bottom in the markets. So I'm very happy to see this, because here we have one indicator that retail quit here. And I don't try to be a channel for the 90% who lose money. They won't like my channel. They will look for channels who tell them what they want to hear, which is laser eyes to 100k at the euphoria top over here, and depressing calls for 0 at the bottom. I'm here to extend my network with people who make money. As you might recall, I've used a template for the past few months to try to take all criteria into account for bottom scouting. And if you check how this looked on the 25th of October 2022, 25th of October was here. here. So that was in fact not the bottom. And here is how those criteria came out on that date. I asked, do we have a chart bottom according to classical charting? Is there bottom construction here somewhere? And I said no, there isn't at that point. So that was a no. Then we checked the trend direction. Has it turned up? No, it was down, but support held. We had multiple bounces on the support, and at that point it had held. So that was kind of a neutral. Then I asked, have we met the retracement target? And that just meant that at many of the previous occasions we had had about 85% retracement from top to bottom. And at that point in mid-October we hadn't got as big of a retracement as the previous cycles. So that one was no. Next one, recent pattern target. That meant that we had a double top here, and that target hadn't quite been met either. So that one was also a no. Then we had the grayscale BTC discount, which at that point kept trending down lower, meaning more and more discount. Institutional players are willing to pay less and less for one of these shares. And finally, the DXY parabola, the dollar strength index on 25th of October was still intact. So if we sum this up, this counts as -1, 1, 2, 3, 4, 5, 6, means -6. Probably that's not the bottom. Then, as you might recall, I repeated this exercise on the 13th of December, about a month ago. Then this came out quite different. So reminder, the 13th of December was here in the price chart. Then I said, yeah, there actually is a chart bottom construction, which was this one. But sadly, the trend direction was still a solid down. That score became blue. Then I said, market reacts differently to the negative news now. There's negative news, but market doesn't dump anymore. Retracement target had gone further then than it had back here in October, so I gave that one a pass. The retracement target from the double top, however, had not been met, and the GBTC discount, the grayscale discount, was still trending lower and lower. But the DXY parabola had then conclusively broken. 13th of December was here, so you can see that very clearly. But then I added one. I said that we cannot really say that there is low risk for another catastrophic event following the long sequence of disasters that had really played out. +1, back to 0, +1, back to 0, -1, back to 0, -1. And conclusion became that, yeah, it's possible that the bottom is in, because this is very close to ±0. Now, it's time to repeat this today. Let's see how it comes out. Chart bottom. Yes, there is definitely a chart bottom. This was a double bottom here. As you know, we have to cross the highest point between the bottoms, which was kind of a little confusing here. Is it this level or is it that level? Now that doesn't matter because we've already crossed it. And actually that target has already been reached, but still that is a yes. Trend direction, however, is still neutral. Market reaction to news remains the same. There was shockingly bearish news coming here, and market in the end goes up. Higher lows and a massive pump. Retracement target is the same as before. We haven't made any lower lows, but totally became like 77%, pretty close to 80-85%, so I gave that one a pass. Same with the major pattern target. The double top target has not been reached, but targets do not always reach all the way. Especially if a lot of people expect it to happen, the larger players may front run it to sideline the majority of the market. Still, not reached. GBTC discount then. Here, my friends, we have gotten exactly what I was looking for. This has turned around and started trending upwards instead of downwards. Look here. This is what I've been talking about for half a year. Now we have it. Institutional players are willing to buy Bitcoin at a discount again. So that one is now gold. DXY parabola. Still broken. It's trending down in an intact channel. Don't need to know much technical analysis to see this. It's clear as day. A weaker dollar strength index typically means stronger speculative high-risk assets like Bitcoin or tech stocks, for example. But can we say that there is now low risk for another catastrophic event? No, I don't think we can say that. We have, for example, the DCG, the parent company of Grayscale, and Genesis, question marks, and all that stuff that I talked about in previous videos. So I think we can't say that one. That one is still a risk. But still, if we sum this up now, +1, +2, back to +1, +2, +3, ends at +2. And as I said, targets are not always met. It's a guide, it's not really a rule. So if we take those out, this looks even more positive. Then we actually get to +3. And as I showed you with the YouTube subs, and you can see the same thing on Twitter. I'm not sure you noticed this weekend, but there was so much saltiness on crypto Twitter. Everyone was angry. I posted something, people were like angry replies. Means that most people missed this entire move. They were sidelined. That's why they are angry. And retail positioning is a counter indicator. So if retail are sidelined, they have quit, they missed the move, that is a positive sign because the big shakers might then move the price in the other direction. So if we add that, we get to an overwhelmingly +4 here. But this sheet isn't my process, as you know. My process is more centered around Larsson Line and catching the big moves, not trying to buy the exact bottom as such, for reasons that would be too lengthy to go into here, but largely it's a statistical conclusion. So, did I buy? Yes, I did! I bought here on the 10th of January last Tuesday, as posted in our Discord here. I think the exact level was 17,433. And after changing my mind back and forth, I came to the conclusion to hold that position. Why did I do that then? For two reasons. As I wrote here, we cleared 2 resistance level in a couple of days, and huge volume profile below someone's been accumulating. So what am I saying? These 2 levels, this one and this one, I've had for a long time. You've seen them if you've been following along. First, this level was support, then it broke down, it became resistance, as you can see here, then that broke up. And actually that already was probably an entry trigger. I was kind of in holiday mode, so I missed it. But then the next level also broke up, which was resistance level from here. You can see it, that broke up here on that Tuesday. And when that happened as well, I pulled the trigger and bought, which worked out this time. That was fun to watch, wasn't it? So I recorded that on the 16th of January. Then what happened shortly after? So 16th of January, that was here. Well, Larsson Line confirmed gold the next day or the day after on the 17th or 18th, depending on your exchange, at about $21,000. So on the 16th, when I showed this model, we ended at +4. But 1 or 2 days later, the trend direction, the missing piece of this puzzle, turned gold also, still at 21K, and putting the score to an overwhelming majority gold, +5, with Larsson Line gold trend up. The only remaining risk was this, low risk for catastrophic event. And I think it was a correct call to leave that one blue, given what has happened this year. So that was here. Then price confirmed this inverse head and shoulders, and then got into this range. This video will be too long if I talk too much about this range, so let's jump forward to today. The target from this low time frame inverse head and shoulders has been met, but as I said yesterday, actually, let's play what I said yesterday instead. For Bitcoin, this inverse head and shoulders that I've covered since March, this pattern is still in play. On a linear chart, this pattern gives a target of about 34,500. So that target has now been reached. In fact, it's still reached right now. And price was at a high of 35,157 earlier today. But I also said yesterday, on linear chart you measure the target in absolute numbers. If we use target on the log chart instead, the target is actually around 40k, and that target has not yet been reached. So if you missed everything, maybe you fell asleep from boredom, or you got shaken out from this choppy range, which is then understandable. Choppy price actions and fake outs. I didn't play this range perfectly either, but I did come out of it with a good size Bitcoin position. If you didn't, then you're probably thinking if you should buy now. And this is a breakout of the range, with the trend up, with Larsson Line gold. And that is what at least I was looking for. But we have run up quite far already. So let's take a look at the risk versus reward short term. The downside risk means where would you need to cut the position, because your thesis is no longer correct. And the thesis here is that this is a range and this is a range breakout. If we then find ourselves back into the range, that clearly wasn't correct. And you would know that somewhere down in the range. Maybe here, at 28,890. So the downside risk exposure is then minus 16%. If we then look in the upwards direction, 40k or there around has been an important level in the past. It's an even number, so everyone would kind of see that. So we would expect a little bit of front running, say we would get out at 39,000 something, maybe somewhere here. That is then also approximately 15-16% upside. So reward about the same. So I don't really see the risk reward for me to take another position right here. Instead, I'm going to sit on the positions I have from before and instead look for opportunities in altcoins. Now is the time where Larsson Line Pro will really shine, finally. And we could also get a more favorable risk reward entry if we get a retest of the upper range boundary that holds and flips into support. That I would also be very interested in buying, if we get it. Coming back to the angry comments on Twitter or X. I'm guessing they missed the move. But guys, don't beat yourselves up over that too much. Missing a move doesn't mean you lose money. There are 100 charts every day that go up more in percent than Bitcoin did since yesterday. You can't be angry over missing all those every single day. You'd be angry the whole time. There will be 10 new opportunities today. So roll up your sleeves instead and dig in. Instead, beat yourself up if you do a dumb thing that makes a huge dent in your portfolio. Meaning if you lose big money. For example, if you went all in on a leverage short yesterday. Yeah, then be angry at yourself. Further, don't expect to catch the entire move with the entire portfolio. The objective is instead to catch a good part of the move with a good part of the portfolio. Because if you go hard and all in, then one day will come when it doesn't work out and you lose big, which is exactly what happened last night on big scale. OI or open interest went from 10.5 billion to 9.3 billion in the pump candle, which means that those were shorts that got wiped out on this upthrust in price. I can guarantee you that there were major players who went bankrupt and lost everything last night. And while I haven't checked the facts, reportedly there were popular trading groups that were short and strong through this move. Maybe they should have gotten the Larsson line and course. So dear all my haters, welcome to go to www.ctolarsson.com and press course and indicator and join. Looking forward to having you. Thank you, tack. CTO Larsson out. Yes!